Hey everyone, and welcome back to the channel. If you're new here, we're all about making your money work smarter, not harder. Today, we're diving into a topic that affects every single one of us: taxes. I know, not the most exciting word, but what if I told you that with a little bit of planning right now, you could significantly boost your tax refund in 2025? That's right. The moves you make today are what set you up for success tomorrow. So grab a notepad. And let's talk about the smart tax strategies that savvy Americans are using to maximize their 2025 returns. First things first, let's get the timing right. Why are we talking about 2025 taxes already? Because tax planning isn't something you do in April right before the deadline. It's a year-round activity. The most effective strategies happen long before you even think about filing. By being proactive, you gain control over your financial situation instead of just reacting to it. Think of it like this. You wouldn't train for a marathon the week before the race, right? The same principle applies to your taxes. Let's start with one of the most powerful tools in your tax-saving arsenal: your retirement accounts. Are you maxing out your 401k or your traditional IRA? Every dollar you contribute to these accounts is a dollar that could be deducted from your taxable income. For 2024, the contribution limit for a 401k is $23,000. And if you're 50 or over, you can add an extra $7,500 as a catch-up contribution. For traditional IRAs, it's $7,000 with a $1,000 catch-up. Don't leave this free money on the table. It lowers your tax bill now and builds a wealthier future for you later. It's a true win-win. Okay, let's talk about health savings accounts, or HSAs. If you have a high-deductible health plan, an HSA is an absolute game-changer. I call it the triple tax advantage superstar. Why? First, your contributions are tax deductible, lowering your income right off the bat. Second, the money in the account grows tax-free. And third, when you withdraw the money for qualified medical expenses, those withdrawals are also completely tax-free. It doesn't get better than that. For 2024, individuals can contribute up to $4,150. Now, for all the parents and guardians out there, listen up, the child tax credit is a major one. While the rules have changed back and forth, it's crucial to stay updated on the current amounts and eligibility. Make sure you have the correct Social Security numbers for all your dependents and that you meet the income requirements. Another fantastic tool is a 529 plan for education savings. While contributions aren't deductible on your federal tax return, the earnings grow tax-free, and withdrawals for qualified education expenses are also tax-free. Plus, many states offer a state tax deduction or credit for your contributions, which is an extra bonus. Are you a freelancer, a gig worker, or a small business owner? This section is for you. The key to minimizing your tax burden is meticulous record keeping. You need to track every single business expense. We're talking home office costs, software subscriptions, mileage, supplies, continuing education, everything. Every dollar you document as a legitimate business expense is a dollar you don't pay taxes on. Consider using an app or a simple spreadsheet to track these expenses in real time. Don't wait until the end of the year to try and piece it all together from a shoebox full of receipts. That's a recipe for missed deductions and a massive headache. Let's switch gears and talk about investments. A strategy called tax loss harvesting is something sophisticated investors use all the time, but it's simpler than it sounds. The idea is to sell investments that are currently at a loss. Why would you do that? Because you can use those losses to offset any capital gains you've realized from selling profitable investments. This cancels out the taxes you'd owe on your gains. And if your losses exceed your gains, you can use up to $3,000 of that excess loss to reduce your ordinary income. It's a smart way to turn a market downturn into a tax-saving opportunity. Here's another one for investors. Consider your asset location. This isn't about where you live, but where you hold your different types of investments. The general rule of thumb is to hold investments that are taxed at higher rates, like corporate bonds or actively managed mutual funds, inside your tax-advantaged retirement accounts like a 401k or IRA. Conversely, you can hold more tax-efficient investments, like index funds or ETFs, in your regular taxable brokerage account. This simple organization can significantly reduce the overall tax drag on your portfolio's growth over time. Donating to charity is a wonderful thing to do, and it can also provide a nice tax benefit. If you itemize your deductions, you can deduct your charitable contributions. But here's a pro tip. Instead of donating cash, consider donating appreciated stock that you've held for more than a year. When you do this, you can typically deduct the full fair market value of the stock, and you completely avoid paying capital gains tax on its appreciation. This allows you to give more to the charity and get a bigger tax deduction for yourself. Again, another win-win situation. Let's revisit your paycheck for a moment. Have you checked your Refund form recently? This form tells your employer how much tax to withhold from each paycheck. Life events like getting married, having a baby, or getting a new side hustle can all affect your tax situation. If your withholding is off, you're either giving the government an interest-free loan all year, that's what a big refund is, or you're setting yourself up for a nasty surprise tax bill. Use the IRS's tax withholding estimator online. It's a fantastic free tool that helps you dial in your withholding perfectly, so you have more money in your pocket throughout the year. Finally, the most important tip I can give you is this. Don't be afraid to ask for help. Tax laws are complex and they change constantly. While this video gives you a great starting point, a qualified tax professional like a CPA or an enrolled agent can provide personalized advice tailored to your unique financial life. They can help you navigate the nuances, identify deductions you might have missed, and create a long-term strategy. The money you spend on their fee is often saved many times over through their expertise. It's an investment in your financial well-being. So let's recap the key moves. Max out your retirement accounts, leverage an HSA if you can, take advantage of family and education credits, meticulously track business expenses, harvest tax losses in your portfolio, and fine-tune your Wu4. By implementing even a few of these strategies, you'll be well on your way to a much happier tax season in 2025. Thank you so much for spending this time with me today. I hope you found this information valuable and empowering. If you did, please give this video a thumbs up. It really helps the channel. And if you haven't already, hit that subscribe button and ring the bell so you don't miss our future videos on making your money work for you. Until next time, take control of your finances and plan smart.